3 things to move the markets higher in the next 48 hours. No, Leonardo, no, not another bullish video. I don't think I can take this anymore. You're killing me with this bullish stuff. Market rally when everyone expects a drop in financials? Are you nuts? That just don't even sound realistic. Everyone says it's a typical dead cat bounce of a bear market that is destined to fall. Guys, let's take a closer look. First, let's take a look at the difference in the behavior between a bear and a bull. So here's my attempt of a drawing right here that shows you the characteristic of a bear behavior. How often in the month of October or December did you see this with the market? In other words, it opens higher, and then by about 10, 11 o'clock, what happens? It starts selling off. And please observe how sharp the sell-off was, right? In just a second, I'm going to show you a few charts that will actually show you this behavior of an actual chart on S&P and the VIX. So just remember, when you see the markets doing this, it's a bear. And especially the characteristic of a bear is when the markets, they gap up significantly higher in relation to where they closed the day before, because oftentimes that move is not going to be sustainable. Now, let's take a look at the characteristic and behavior of a bull. Predominantly, this demonstrates what do institutional investors do when the stocks drop. As you can see, in this particular case, the market is dropping in the morning, and then institutional investors, what do? Of course, buying the dip is back in style. So when you see the markets doing this, it is a typical behavior of a bull. So just keep this in mind as I'm showing you a few charts. So January 10th, you were taking a look at the last 3 trading days. So January 10th, what does this look like? And what we're looking at is a chart of S&P 500. Actually, we're looking at the ES futures. So you see it clearly resembles this bullish behavior. So what do the stocks do? Last Thursday, they drop. Okay, so this is where they closed the day before, right, on a Wednesday. Then they drop the next day. And what happens throughout the rest of the day? They create this pattern of going higher. If you were to draw a line, clearly you get in a solid uptrend through the rest of the day. Now, as you can see, it does not necessarily mean that the market will move higher like in straight line, because clearly throughout the day there's been a few pullbacks, and guess what they did? Guess what the institutional investors did? They saw this, the pullbacks were created intraday. They bought the pullbacks, they moved the market higher. This is a behavior of a bull. Let's take a look at January 11th. Again, the market drops in the morning in relation to the prior close, and what happens after that? Look, the first dip, they buy. The second dip, they buy. The third dip, they buy. The fourth dip, they buy. Every dip that happens throughout the day, what happens? They buy it. Now, the market only manages to close like a point higher, and NASDAQ still finishes lower in the negative, like minus 10, 15 points. Now, what do we get today? January 14th. I drew the 2 lines here because, one would actually replicate the behavior, including the pre-market hours. So clearly, pre-market, the markets were dropping like crazy. And after that, what happened? They bought the dip pre-market. When the market opened right here at 9:30, we didn't even hit the lows that were established in the pre-market. You got a nice solid uptrend here as well. So they bought the dip here pre-market. They bought the dip when the market opened. And they kept buying every dip throughout the day. So if you draw this line, we're still in a solid uptrend. Now, I know it's hard to believe because overall, the markets, where did they close today? Well, they closed negative, right? NASDAQ closed negative, like 60 points. You got S&P 500. Where did it close? It closed negative. So if you just focusing on like the price action, it's really hard to understand. Hold on. It looks like the markets are dropping. But to help you visualize what's actually happening, I'm going to combine the chart and show you like the last 5 trading sessions to really help you visualize a little bit better that this is indeed a bull in bear clothing. And it's important to distinguish that, because for those traders that just simply focus on the price action, it may be very tempting to just keep buying puts. And then so when you see the market drop in the morning, what do you typically want to do? You want to buy puts, because you're looking at the screen. The price action tells you to do what? To buy puts, because everything is dropping. While in reality, when you observe these typical characteristics of bullish behavior, when institutions keep buying every dip, you want to do exactly the opposite. So in the last video, I basically said the markets could be moving higher for a couple of days. Well, clearly today they did not move higher, but we're still observing some really solid characteristics of bullish behavior. And at this point, I've actually changed my forecast, and now I'm saying that the market could move substantially higher over the course of the next week or two. And I know it's clear the opposite of what everybody else expected, but I can only share with you guys what I'm looking at that makes me bullish. You can make your own decision what you want to do with this information, but I'm actually quite bullish. And I'm going to try to post a video in the next few days showing you some comparisons that I was actually able to observe between some of the charts that I discovered in 1970s that I think are very similar to the situation right now. So more on that later. We'll get back to the purpose of this video, is to show you that even on the days like today, where the markets are red, where clearly the price action tells you that they are selling. Okay, if you were to look at the last 5 days and combine the action in S&P 500, it's a clear bull. Okay, and on this chart right here, every dip, you see it was purchased. Every time the dip happened, they bought it. Every time the dip happened, they bought it. Now, what's making this bull even more serious of a bull, it takes it from like a little tiny bull to like a big bull, is the fact that, look at this accumulation distribution, right? Every time the market's making the dip, they're actually buying it. And the accumulation distribution is in steady uptrend. So in relation to the last couple of days, S&P 500 closed roughly at 2580. It did hit on Friday a high of like 2599. So even though we're 20 points off the high that was established like a day or two ago, okay, we are actually at the highest level on the accumulation distribution, which tells you that the banks, institutional investors that invest millions or billions of dollars, they continue to buy at these levels. So here's the conclusion of this chart. While markets look like they're dropping each day, accumulation proceeds to move higher, which equates to institutions continue buying stocks. Now, the only bear I'm going to show you is the bear on the VIX. Remember when we were just recently discussing in the price slides, how does a bear look and how does a bull look? Well, look at this. And for those of you that don't know the VIX, it's got exactly the opposite relationship with the market. When the market goes higher, what happens to the VIX? The VIX goes lower. When the market drops like crazy, like in December, VIX goes to the moon. And so look at the behavior of the VIX. The VIX confirms day after day. Now, this is the chart of the VIX for the past 5 days. It keeps confirming the downtrend, the bearish behavior in the VIX. And so, as described earlier, you see when things jump and they get up higher and then they stay there for just a little bit, but then they start selling off. This is a bear. So not only do we have instances where accumulation distribution consistently climbs higher, but we also have the confirmation on the VIX that VIX is an entirely bearish downtrend. And so that often happens exactly when institutional investors keep accumulating their positions. Now, unlike individual investors, institutional investors, they do not buy just all the stock they want to buy over the course of one day. They have to build and accumulate their positions over the course of a number of days or even the course of a number of weeks, simply because of the amount of shares that they're buying. What you're seeing right now, I'm going to show you a couple more charts, is exactly that. So basically, the VIX is in a solid downtrend, each day confirming that institutions continue accumulating stocks at these levels. And so to you, if you're just looking in at the price action, it may look like things are dropping, while indeed institutions are still buying stocks. They're not done accumulating their shares. And guess what's going to very likely happen once they're done accumulating the shares and they're done building their positions? That's when the stocks could make a significant move higher to the upside. What are the three things in the next 48 hours that could actually cause the market to go higher? Okay, here's number one. Institutional investors are buying financials. Okay, so for the longest time, financials just been dropping like a rock. And for the very first time, we're actually seeing that financials are catching a bid here. And we're noticing a difference in behavior. Citigroup was one of the first financial stocks to report earnings. And tomorrow we're going to see earnings from Goldman Sachs, JP Morgan, Bank of America, Wells Fargo, BlackRock, and so on. So if this behavior is confirmed, if we're going to see what we have witnessed today in the price action of Citigroup, and what happened? Do you remember, guys? The behavior of the bull and the behavior of the bear. What is this? This is the behavior of a bull. In other words, after they announced in the earnings, what happened? Initially, Citigroup was dropping pre-market. And what did the institutional investors do? Yes, that's right. They bought the dip. And not only did they buy the dip, very interestingly, the stock moves up 4%, which has not done in a long time as well. They were really building some solid big positions in the price of Citigroup. Now, generally speaking, we're about to start earnings, and the first stocks to report their earnings are really going to set to how a lot of stocks are going to be behaving. So it's very important tomorrow that if we're going to see the similar behavior in the financials, you got one solid sector that's been lagging that is now going to outperform the market. And if that takes place, that is going to be our thing. Number one, why the markets are not going to fall, but they will rather rally higher from here. Now, I'm not talking about a 10-month run here. I'm talking about short term. The markets could easily move maybe 1,000 points on the Dow as the result of some of the things that we're discussing here. Point number two, institutional investors are not selling technology stocks. They actually accumulate in stocks. So the most important thing is the thing number two, as far as technology stocks concerned, is Netflix is going to kick off the earnings on Wednesday after hours. And the most important observation is going to be this. If Netflix shares dip and they actually come in, they meaning institutional investors, they do come in and buy this dip after hours, then all FANG stocks will move higher. Now, here's the situation we're going to have then. If they buy the financials tomorrow and they buy the tech on Wednesday night, you're going to have two crucial sectors that will be moving higher. In other words, you're going to have financials moving higher and technology stocks moving higher. Essentially, what does that equal to? That equals to the markets overall moving higher. Now, let's take a closer look. What's been going on with Netflix? Why am I saying they're not selling Netflix? Well, Netflix just about 12 days ago, when we posted the video saying, hey, the market is about to rally, while everybody was still bearish on it, we said it's going to be multiple consecutive days higher. And that was, if you have missed the video, it was posted, I think, on December 27th or 28th, right? So check it out if you missed it. But here's what we've got. We got Netflix, and this chart doesn't capture the entire 12 trading days, but captures 10. Basically, Netflix shares moved from 230 to 330, roughly. I mean, they were trading as high as actually 341. But this time frame, I mean, this is a huge move. I mean, we're talking about a 30-40% move in the stock here, and nobody's in the rush to sell it. I mean, the fact that Netflix dropped $4 today, that's no big deal, right? I mean, after moving $100 in 12 pretty much consecutive days trading higher, it only falls $4. Nobody's in a rush to sell it. And generally, in my observation is, when a stock makes a significant move like that, institutional investors will start locking gains. Well, apparently they're not scared about Netflix earnings. And so that tells me, even if initially Netflix shares are going to drop, I think there's a high probability that institutional investors will be buying the dip in Netflix. As long as Netflix does not get completely crushed, and it doesn't, let's say, trade back to, 260, 270, as long as it, let's say, drops to 300 and bounces from there back at some point after hours to back to 330, maybe 340 level, I think all the FANG stocks are going to really ricochet just like that in the same fashion, and we're going to see all the Amazons and Googles and Apples, they're going to be flying higher. Just to make the case a little bit stronger, look at the accumulation distribution, right? So sometimes we'll see a stock moving higher while the accumulation is dropping. Get a pretty consistent reading here. So even at the high levels right here, 330, 340, they have continued to accumulate the shares. The same thing on Amazon, right? From in the last 12 trading days. Went from 1307 to 1620, 1670 range. I mean, that's a $400 move almost. And look, so here's the huge move higher. And so now it's really, it may appear to you that it's falling, but all it is, it's trading sideways. Okay, it's trading sideways, and you clearly see there was one point in the morning it was dropping just under 1600. Look at how quickly they actually bought that dip. Right? It took them seconds. Boom. Actually, that was one of the alerts in our VIP trading group today. We're actually suggesting to buy the dip in Amazon, and so straight after that went pretty much to 1650, then retreated back to this 1620, 1618 level. So we still are pretty bullish on Amazon. In the prior video, we said it's going to go to 1705, and so we still stick to that prediction by Friday. Now, clearly, the only thing that could ruin this type of situation if something crazily happens to Netflix. In other words, in my calculations, when Netflix falls, they're going to buy the dip. If something crazy happens and they don't buy the dip in Netflix, then clearly, okay, all these calculations, they are going to be 100% off track. And so in that case, Amazon could fall as well. But observing the action, the way the institutional investors have been accumulating these stocks, I think we have a greater probability of the stocks actually moving higher from here rather than lower. And as you can see, accumulation distribution as well, as actually we're trading sideways on Amazon. The accumulation distribution continues to go higher, indicating that the banks are accumulating indeed Amazon shares at these levels. What is the third thing? Well, the third thing is, of course, everyone is expecting the resolution on the government shutdown and the wall. So two things that we see could be as an opportunity. Number one, if that resolution could come, and I think it could come in the next 48 hours, then we will have a situation where the markets pretty much automatically could be flying higher, literally a few hundred points on the Dow higher. And, you know, of course, S&P and NASDAQ in the same proportions as far as percentage basis would be moving higher as well. So keep an eye on the materials sector, steel, commercial construction stocks. Here are a couple of examples. VMC, current price 102. Our target price on that is 115. MLM, current price 180. Target price at 196. And guys, I'll give you a bonus because you hang in here with me all the way to the end of this video. So the bonus is this. We live in a crazy world. And sometimes, as sad as it sounds, just to get better results, all we have to do is lower our expectations. So lower expectations from earnings from the companies that are fixing to report earnings this earnings season could make what could have been perceived as bad news and turn it into actually good news. That will actually by itself could create a reason for institutions to buy the stocks rather than sell them. To make it easier, all right, I'll give you an analogy. It's kind of like girls complaining all the time. Where can I find a good guy? I mean, it's impossible. All of them are gone. Look, I tell them this. All you have to do is lower your expectations and you'll have a good man in no time. So, but most of them, what do they have? They have like a 3-page list of the things, you know, he has to be this, and this. And they're like, you know, as they get in, in their journal, they just keep adding things on. I mean, good luck with that strategy. You know, if they would just use the simple strategy, knocked it down to like 3 things, okay, just kind of like we're doing in this video, 3 things why the market could break out higher in the next 48 hours. Trust me, they'd have much better results. So, I mean, I hope some of them are listening. They're probably going to leave some bad comments. Hey, whatever, it is what it is. So, guys, focus. Do not let the bear, which is actually a bull, trick you. A bull in bear clothing. Don't let him trick you. So get ready. Get ready to buy the dip in financials. Get ready to buy the dip in tech. Now, if none of those things are happening, right? I mean, clearly, if they're not buying the dip tomorrow, in financials, if something crazy happens, then this whole theory is off the table. But, you know, from studying the charts and studying some things, you know, over the last few days, I think there's a greater probability that at this point the banks will come in and they will buy the dip rather than the stocks bouncing higher and them actually selling off. So, guys, I wish everybody successful trading week. I hope this helps. I'll catch you in the next video. And if you're trying to learn more about stock charts, if you're trying to understand how the 13 markets move formula works, definitely just click the links below, take advantage of them. If you got any questions at all about trading, just simply click the link under the video, schedule like a 20-30 minute coaching call, and just get all your questions answered about trading stocks, options, charts, whatever you got. Take advantage of it. And yeah, I've been flying a lot, so some of these calls that were scheduled, I couldn't make it because of some flight delays. If you're one of the people that I couldn't get on the call with, or one of my senior traders could not get on the call with, just reschedule it, please, and we'll do our best to talk to each and every one of you. Thank you guys for watching. I'll catch you in the next video.